Hey everyone, Brad Palladini with Palladini Law, where we help taxpayers across the country solve tax problems with the IRS. And today we are talking about IRS Revenue Officers. So we're going to talk about what a revenue officer is, the difference between revenue officers and revenue agents. We're going to talk about what some of their powers are. We'll give you some tips on how to deal with them. We'll also talk about how to spot a fake revenue officer. And then at the end, we will let you know if you need to hire a tax attorney or someone else to help deal with a revenue officer, or if you can deal with it yourself. So let's get into it. Okay, so what is a revenue officer's job? They have two primary job functions. One is to secure delinquent payment of taxes. So if you owe taxes from previous years, their job is to collect it as quickly as possible for the IRS. And two, if you have not filed tax returns for previous years, their job is to secure those tax returns. Oftentimes clients will contact us and they'll say an IRS agent is assigned to the case. And our first question is, okay, well, are they a revenue officer or are they a revenue agent? Because there's a big distinction. A revenue agent is essentially just an auditor for the IRS. Their job is to look at tax returns that you have filed and determine their accuracy. So they'll make sure the income is correct, the deductions are correct, you have all of the documents required to justify the numbers on the return. If they look at your return and they think that there's more income or that you don't have proof of all of the expenses, they may say there's an additional balance due. So let's say you filed a tax return, you're audited, there's a revenue agent assigned, and they determine that you owe $500,000. At that point, once the case is finalized, the case could then be transferred to a revenue officer. The revenue officer's job is to collect that $500,000 as quickly as possible for the IRS. They don't look at the accuracy of the tax return. They don't care if it's right or wrong, if the auditor or revenue agent did their job or not. They just see a number on their computer screen and their job is to collect that number from you. So let's talk about some of the powers of revenue officers. They have quite a few, but the powers are not unlimited. One of their powers is to issue summons. So this will happen if they request bank statements or other financial information from you that could be received from a financial institution and you don't provide it voluntarily. So oftentimes revenue officers will want the last 3 or 6 months of bank statements. And if you don't provide that to them, they'll just go to the bank and let the bank know that they are required to provide these documents directly to the IRS. So that's a pretty big power that they'll use. They'll also use the summons power to maybe force you to appear and conduct an interview, answer questions for them, or to force somebody at your company to appear and answer questions for them. IRS revenue officers also have the power to issue liens and levies. What's the difference? A lien is basically just a security interest. So if you own a home and you have a first mortgage, but there's also equity in the property, so let's say the home's worth $500,000, and the mortgage is worth $300,000, the IRS will file a lien, which means if you were ever to sell the property, the first mortgage would get paid first. And then if there's no other lien holders, the IRS will get paid directly from escrow. In addition to revenue officers, other IRS employees also have this power. But if there's a revenue officer assigned to your case and you owe outstanding tax debt and a lien has not been filed, they will almost certainly file this lien. An IRS levy is when they reach into your bank account and they take money to satisfy the tax debt. So they issue a letter to the bank saying, hey, Chase Bank, this taxpayer owes us $30,000. Please send us everything in the account up to $30,000 to satisfy this debt. Now, there are certain legal notices that the revenue officer must send first before they can issue a levy, but they don't tell you like, hey, I'm gonna levy your account on Thursday, right? Because they don't want you emptying the account and then nothing being there. If you're a business, a revenue officer can also send an accounts receivable levy. So basically they'll look at anyone who has paid your company in the past and they will send them a letter saying, hey, don't pay that company, pay us directly because they owe us money. And this is pretty devastating for a business. It interrupts cash flow. It's embarrassing. And oftentimes vendors don't want to continue to work with you if they know you have IRS tax problems. Whether that's logical or not, I mean, it's probably not, but at the end of the day, they just don't want to deal with the hassle or the headache. IRS revenue officers can also contact third parties. So sometimes this is a neighbor. It could be an employee. It could be a business partner. And what they're trying to do is just gather information about the tax taxpayer to let them collect the debt that's outstanding. So in the past, revenue officers would knock on neighbors' doors, ask them, hey, what type of car is this guy driving? Do you know anything about them? Do they seem to have money? To try and research and see how much they believed they could collect from this taxpayer. IRS revenue officers cannot seize property directly. They do need to get approval for that, but ultimately the power is in their hands to make that recommendation. So if there's a revenue officer that's been assigned to your case and you haven't really been cooperating, and maybe you have half a dozen vehicles, maybe a car collection or something like that, the IRS revenue officer could make a recommendation to seize those vehicles to satisfy the tax debt. They could also make a recommendation to foreclose on your property. So again, it's not the revenue officer himself or herself that's doing the foreclosure. That would be handled by an attorney for the IRS, but they are making that recommendation. And so maintaining a good relationship with them to prevent that is imperative. Last but certainly not least, the revenue officer could make a referral to criminal investigations. So if a revenue officer is assigned, you're not cooperating with them, and they believe that you are hiding assets or hiding money to avoid paying the IRS, they could refer your case to criminal investigations, in which case it now becomes a criminal matter rather than a civil matter. Okay, so revenue officers certainly have a lot of power and they can make your life extremely difficult. So how do you work with a revenue officer? First, when you speak to a revenue officer the very first time, you want to make sure you get the manager's contact information. Every revenue officer has a manager, and the revenue officer is required to provide the manager's contact information if you ask. So you have to ask. You want to know their name, their phone number, their fax number, and their address. Because if you ever have trouble reaching the revenue officer, you want to make sure that you can get in contact with the manager. In addition, if the revenue officer does something or proposes something that you disagree with, you want to have the opportunity to speak to the manager before any action is taken. So on the very first call, you want to make sure you get that information from them, and you can do it in a nice way. You can just say something like, hey, my understanding is that you have a manager. I just want his or her contact information in case I ever have trouble reaching you. Could you please provide it? Again, they're required to provide it. If they don't, you could escalate it with taxpayer advocate, but I've never had an issue with a revenue officer refusing to provide their manager's contact information. The second tip I have is that you want to stay informed, prepared, and meet all deadlines. So often the revenue officer will issue a form 9297 that's going to give you a laundry list of documents that you need to provide. That 9297 is going to have a deadline, typically 30 days. And right on the notice, it will tell you if you do not meet that deadline, the revenue officer will take enforced collection action, like filing a lien, issuing a levy, maybe doing a wage garnishment, whatever is appropriate for the circumstances. If you can't meet the deadline within those 30 days, you need to call the revenue officer and request more time. If you can't reach the revenue officer, you could contact the manager and say something like, hey, I had a deadline of December 30th to provide these documents. There's a lot going on. I just need another week or two to provide them. Can we have until January 15th? Revenue officers and managers are willing to work with you if you demonstrate that you are willing to work with them. So if you don't meet the deadline, don't request more time, they're not going to go out of their way to help you out. But maybe within those 30 days, you provide half or a third of the documents that they requested. That shows the revenue officer that you are taking this seriously, that you're working towards a resolution, and they're much more willing to give you additional time than if you provide nothing or don't contact them. If you end up asking for additional time, you always want to document the file. Revenue officers typically deal with e-fax machines. So they have a fax number and you have to fax them the information, or you can mail it to them. I know most people these days don't have fax machines. If that's the case, then it's all snail mail. But if you requested a 2-week extension and the revenue officer agreed, it is best practice to send them some sort of confirmation in writing, saying like, hey, as discussed on this date, you gave us an additional 2 weeks, including an up to January 15th to provide the rest of the information. If you disagree with our conversation or with my understanding of that conversation, please contact me immediately. So that way, if the revenue officer maybe had a different takeaway from the conversation and issues a levy on January 5th, you could provide that letter saying, hey, we talked about this. I sent you this letter where we discussed the additional time. Where was the miscommunication? And can we get the levy released, which they should do in a case like that. So there are many different types of revenue officers. You know, the IRS is a very large government organization. And like every other organization, whether it be a government organization or a private entity, the larger they get, the more chances of bad apples kind of seeping through. So in my experience of working with revenue officers, I've dealt with hundreds of revenue officers all across the country. The vast majority are pretty good, right? I may not always agree with their decisions. They may be tough, but they are somewhat reasonable and you can work with them. There are a few scattered throughout the country that are pretty terrible, and they are overly aggressive, and they really just want to collect all of the money at once and don't want to work with you to resolve the case any other way. Unfortunately, you can't get your case reassigned to a different revenue officer, but potentially if you're having trouble working with him or her, there are certain appeal rights that you have to get the case into the hands of an appeals officer, or you could try to work with the manager to get the resolution that you are seeking. Again, most revenue officers are pretty good. So long as you demonstrate that you are willing to work with them, they are willing to work with you. So meeting their deadlines, providing the documents that they want, organizing it in a way that makes their job easier goes a really long way to getting the result that you are seeking. I do want to talk briefly about fake revenue officers. This is something that has happened in the last few years, and they take two different forms. One is you'll get a letter in the mail saying that you owe tax debt. It may say that there's a warrant out there or something of the sort, and it will be signed by not a revenue officer, but a resolution officer. What's a resolution officer? Well, there are some tax companies throughout the United States that send these letters to taxpayers, more or less pretending to be revenue officers, but really just trying to solicit business from you. So the idea is they send this scary letter to you, and when you call the number on the levy, they say, hey, this is something we could help with. Pay us $30,000 and we can work with the IRS to resolve this for you. Stay away from those companies. I mean, anyone who's willing to provide such a misleading letter is probably going to mislead you about the potential avenues or results of a case. The second area where we see fake revenue officers is people receiving phone calls to collect the tax debt. Now, this has been very confusing in the last few months because the IRS will sometimes call you, and trying to distinguish between a real IRS employee versus a fake IRS employee can be difficult, but some warning signs to look out for. One, if they're threatening immediate arrest or an immediate lawsuit, it's probably a fake IRS employee. The IRS doesn't call you and give you a heads up that they're gonna arrest you, right? Agents just knock on your door at 4 in the morning and put handcuffs on you. They don't give you a heads up ahead of time. In addition, if they ask for payment through an unusual method, so Apple Pay or gift cards, it's a fake IRS agent. Okay, so if you have a revenue officer assigned to your case, should you handle it yourself or should you hire someone to help you? Now, there are a lot of circumstances where if you're experiencing an IRS tax problem, you can handle it yourself. There's really no need to hire an expert to help. But in the case of revenue officers, I would always suggest hiring a professional, preferably a tax attorney, to help you. Now look, that doesn't mean you need to hire us. There are a lot of good tax attorneys throughout the country, but revenue officers are specially trained to collect the debt from you as quickly as possible. They are not looking out for your best interests. They are looking out for the IRS's best interests. So they're going to do whatever they need to do to protect those interests. And if you're dealing with a revenue officer, you need someone on your side to protect your interest. So that's where having an experienced tax attorney can really help. If you have any questions about revenue officers, leave it in the comments. Otherwise, if you like this video, hit the subscribe button. We are posting more videos every week. If there's a topic that you'd like to hear more about, leave a comment and we will post a video on it.